We saw a bit of a bearish trend coming to the fore. As you can see, we've started the week off on a negative note. What is driving prices down at this point in time? Is it due to the fact that we're going to be seeing holidays coming up and perhaps some investors booking profits?
Well, the trend is likely to continue, probably not at a very steady pace, and it could be attributed to profit taking. Because we saw in the run-up to release of third quarter earnings results, there was a lot of upward price movements, and now that most of those companies have announced, there's little left to cheer the market. But by and large, we should expect some stabilization after the current trend is over.
Well, let's just touch on the likes of Samir Africa, of course, a tyre maker, and basically announcing a profit warning for the year ending December. We know raw material prices coming up quite extensively, and unfavorable exchange rates being one of those big issues. It's interesting to note this trend given the fact that most emerging markets have counteracted the effects of higher raw material prices because their currencies have been appreciating. This is exactly the opposite of what we're seeing in the Kenyan market, isn't it?
Yes, it is, and I think in the case of Samir, as you said, the price of natural rubber has gone up by about 40%, and this is expected to eat into the company's earnings. But by and large, as you mentioned, it's a trend that's likely to continue, especially with the weakening of the shilling, with the weakening of the dollar, following the second round of quantitative easing by the Federal Reserve Bank of America. So we think that this is generally going to affect emerging markets and developing markets as well, and could actually pose a risk to growth in the coming year, because most of these economies, Kenya included, are net importers, and commodities basically also form quite a bit in terms of what we bring out from there. But also on the plus side, there's the effect that a weaker shilling, more or less, could also boost earnings, export earnings, which probably might neutralize the effect.
It's quite interesting. Do you think that perhaps African markets and some of the African countries need to start ensuring that perhaps they start sourcing the raw materials within their economies as opposed to sourcing them externally?
Some of these are actually difficult because if, for instance, you might find that there's no availability at all. Like in the case of Samir, there's no rubber within, so it would still present some challenges moving forward. But I think perhaps there's probably scope for taking appropriate action by central banks just to minimize the impact of a very weak dollar.
Let's touch on Ati River Mining, a company that produced strong results late last week. Earnings per share up 15%, revenue 16% stronger. We also know that it's embarked on various cost-cutting measures and, of course, sourcing the materials within, and this is why they're starting to become quite competitive. One of the big issues at this point in time is financing costs, which, of course, has been a little bit of a bugbear for many investors. But going forward, do you think that this company is a great investment vehicle, given the fact that the infrastructure outlook in Kenya looks very robust going forward?
Athi River definitely is one of the market favorites. I think when you look at their current performance, it basically ties in with what is generally happening in the sectors that it's involved in. Especially when you look at building and construction sector, which according to second quarter GDP figures came out very, very strongly at the top, with growing at 18%. And this is actually expected to continue, especially as you said, partly due to infrastructure, also housing and another issues related to that require cement. So we think Athi River definitely will continue posting good growth, and especially with the new information that they doubled their clinker capacity to about 750,000 tons, and looking at also what's going on in the region, then that definitely puts them up there in terms of growth potential.
Isaac, it's also quite interesting to note that from the banking perspective, we've seen some really good numbers, and at the end of the day, many investors had been pricing in very strong numbers, and perhaps this is why we're starting to see a little bit of stalling when it comes to the NSE 20. Given the fact that so much has already been priced in, where do you see things going from here onwards? Do you think that we can sustain double-digit growth for some of these banks?
Well, that's an interesting issue, but I think by and large we should expect banks to close the year on a much higher note. Looking at all listed banks, most of them actually posted very, very strong double-digit numbers. Some even doubled their profits, like a Diamond Trust Bank. And that explains why there's been a sustained rally on banking stocks for most part of the year. And I think even in the current quarter, looking at the expansion strategies, growing their loan books, increased customer recruitment, use of agency banking, basically they've been able to reach markets that they were previously unable to reach. And I think this is definitely going to show in their earnings results. So I think there's still room for growth, even as things stand currently.